Good day, this is Attila Kovács from the GTC News with the stock scope results for the third week in 2018. Having the bank sector to report last week given us a lot to consider for the future. As always, we can't talk investment banks by themselves, while their goals and obligations are not the same as those with commercial strengths. The good thing is they all have an easily calculable risk, and whatever happens in short term, they are going to be with us forever, and their ups and downs will always give us opportunities to trade with them. Morgan Stanley traded on the New York Stock Exchange under the ticker MS. Morgan Stanley has released its quarterly earnings guidance on January 18, 2018. The financial services provider reported $0.84 EPS for the quarter, beating estimates by 7 cents. The company earned $9.5 billion during the quarter compared to estimates of $9.25 billion. Morgan Stanley had a return on equity of 10.03% and a net margin of 14.10%. The business revenue for the quarter was up 5.3% compared to the same quarter last year. Morgan Stanley had caught our attention as its earnings results crushed our expectations and were among the strongest of all of the banks we have covered so far. These results have sent shares higher, touching new highs. When we initiated coverage on the Morgan Stanley, we discussed that traditional banking was providing a win for the company, but this was more of an investment bank, and that still holds the truth. We consistently prefer banks that have a strong tradition of growing deposits and loans, and have cautioned that while investment banking can be highly profitable, it is volatile and can lead to large swings in earnings quarter to quarter. Citigroup traded on the New York Stock Exchange under the ticker C. Citigroup has released its quarterly earnings guidance on January 16, 2018. The bank reported $1.28 EPS for the quarter, beating estimates by 9 cents. The financial corporation earned $17.26 billion during the quarter compared to estimates of $17.23 billion. Citigroup had a positive return on equity of 7.6% and a negative net margin of 7.05%. The business revenue for the quarter was up 1.4% on a year-over-year basis. Citigroup has now picked up on the growth imperative that the completion of its long restructuring phase places before management. One way to see this is to look at what management wants to talk about in its interaction with analysts. Moreover, the Q4 presentation contained an emphasis on the underlying story for revenues in the operating divisions and also tied this to the efficiency ratio. Bank of New York traded on the New York Stock Exchange under the ticker BK. The Bank of New York has released its quarterly earnings guidance on January 18, 2018. The bank reported $0.91 earnings per share for the quarter, hitting estimates. The bank had revenue of $3.73 billion for the quarter compared to expectations of $4.01 billion. Bank of New Mellon had a net margin of 24.72% and a return on equity of 10.69%. The company's revenue for the quarter was down 1.6% compared to the same quarter last year. The bank consolidated its three largest asset management firms in the US, Mellon Capital Management, Stanley Mellon Asset Management, and the Boston Company, and announced the launch of a specialist multi-asset investment management firm with $560 billion of assets, which combines the best of the mentioned companies. This combined business is expected to improve the bank's positioning in the marketplace with its clients and the consulting community. Moreover, the combination will enable the bank to drive efficiencies by consolidating non-investment functions such as trading and operations to continue the improvement in its margin over time. Goldman Sachs Group traded on the New York Stock Exchange under the ticker GS. Goldman Sachs has released its quarterly earnings guidance on January 17, 2018. The investment management company reported $5.68 EPS for the quarter, beating the estimated $4.90 by 78 cents. The bank earned $7.83 billion during the quarter compared to the expectations of $7.64 billion. Goldman Sachs Group had a net margin of 13.36% and a return on equity of 11.47%. The business revenue for the quarter was down 4.2% on a year-over-year basis. Goldman Sachs released a top and bottom line beat in Q4 that failed to lift the stock price in the early trading hours. The apparent key reason could be found in its continued weakness in fixed income,